What does being financially healthy mean to you? Is being financially healthy the ability to travel, a feeling of security, or maybe it's the freedom to buy what you want when you want? Join me, Cherry Dale, to get on the fast track to financial health and get to know your financial health score.
The following presentation is brought to you by Virginia Credit Union.
When we think of financial health, we focus on these 4 areas: spend, save, borrow, and plan. At the end of our time, I'm going to give you exclusive access to get your personalized financial health score so you know exactly which area you should focus on in order to improve your financial health. Let's get started. If you related to the quote, "I want to have freedom to buy what I want, when I want," then this category is for you. Ultimately, you never want to spend more money than what is coming in. Sounds simple, but in today's economy, especially given the cost of living, it is very easy to spend more than what is coming in. In order to get a grip on your spending habits, start and maintain a budget. Set aside 30 minutes this month to focus on your budget. Each year in February, I reassess my budget and adjust it according to my income and goals. Understand your fixed expenses versus your variable expenses. Fixed are those expenses we have every single month. They don't change. These are very important to pay first. Then analyze where the rest of your money is going, including small amounts of money. I always go back to my online banking and look at the previous month to see what areas I am overspending in. Here's a budget sheet that I use to help me. It is simple and easy to use. Now, let's move on to savings. I actually get a little excited when we talk about savings because savings is all about you meeting your financial goals and creating the life you want for yourself and your family. You want to have very smart goals, specific, measurable, attainable, reasonable, and time-bound. For example, if your goal is to save $5,000 for a trip this year, we can divide that goal by 12 months. That would be $416 a month and $208 per paycheck if you get paid twice a month. Make your savings automatic and even put some barriers in place. I have money automatically going into my 401k, a savings account which is attached to my checking account, and another savings account with another bank that is not attached to my regular account. If you get a raise or a bonus or tax refund, plan out what you are going to do with it before you get it. Put it toward those savings goals. Now, borrowing is a tool to help you become more financially healthy. There's nothing wrong with borrowing money. You just need to have a plan to pay it back. If you can, pay off your credit cards every month in full. Maintain a good debt-to-income ratio. Your mortgage shouldn't exceed 35% of your take-home pay. All other debts shouldn't exceed 15% of your take-home pay. Understand what is on your credit report and how to manage your score. You can go online to www.annualcreditreport.com to pull your credit report. We also have a tool on our mobile app where you can check your credit score. If you want to improve your credit score, you want to concentrate on these 5 categories: payment history, amounts owed, length of credit, history, new credit, and types of current credit. With payment history, it is weighted the most, so you want to make sure to pay the minimum payment on time. For amounts owed, they are looking at how much you have borrowed. Think about that debt-to-income ratio we've discussed earlier. For length of credit history, you want to start building credit at an early age. The longer you have credit relationships, the better it is for your credit score. For new credit, it's okay to open up new credit every once in a while. You just don't want to open up a lot of credit at one time. For types of current credit, they are looking at what types of loans you have. For example, do you have a mortgage, a credit card, or a car loan? Those are all different types of loans. It really is all about planning. If you have these basics covered, or perhaps you are feeling overwhelmed, it is a good idea to reach out and meet with a financial coach or planner. A financial coach is someone like me who can sit down and help create a budget and map out your financial goals. They can set up a plan for you to pay off debt. VACU partners with a program called Balance that provides financial coaching over the phone to our members for free. If you're looking for help with investments, retirement, and more, you'll want to talk to a financial advisor. So, where do you stand with your financial health? Take our financial health survey to get your personalized financial health score. Once you answer the questions, it will give you a score and give you tips on how to improve your own financial health. You can do it. Make a plan today to get on the right track to becoming financially healthy.